So before I let you go, AltaGas in the energy sector, I want to get this one in Cap REIT, Canadian Apartment REIT.
Yeah.
That's an interesting sector because there has been this premium on dividends, and yet, you know, the REIT sector as a group has not done very well. And then there was a bit of M&A that kind of supported things. What do you like in Cap specifically?
Well, Cap REIT is apartments, and early November, the feds announced even a more accelerated immigration policy. Yeah. So we might get 1.5 million people over the next 3-4 years coming to Canada. Some will go to Calgary, some will go to Winnipeg, come to Toronto, some will go to London, Ontario. But that's very positive for demand for rentals. And when you immigrate here, you're probably not going to get a mortgage right away to buy a house. It might take 2 years to get a job, show the bank that you've got employment. So demand for rentals is there. And this stock is down. All REITs got hit because of the interest rates went up. REITs get hit quickly. And then now they're adjusting to a higher interest rate environment. So Cap REIT trades at 20%, 25% discount to its NAV. Mm-hmm. Oh, wow. And you've got good demand for their buildings. They're full. And what's happening within Cap REITs from a micro level, management is selling off non-core apartment buildings at NAV and buying back stock at a 25. So it's in theory, if they did that forever for the next 10 years, they would privatize this company one day at a time, and the stock would go from $43 to $60 where their NAV is. So that's one of my favorite ideas right now. And I think it's a pretty good risk reward at this level. I'm pretty confident, you know, you got a 3-4% dividend plus probably 20% upside next year in that, in that story. So that's one of our favorite defensive plays.